different angle for the mainstream adoption topic is the trading. I expect there'll be some talk of trading in the next panel, which I'm really excited about because there might be some high-speed handbags at dawn. So let's hope for some disagreement between the algorithmic trading firms, because the next panel will be about boosting adoption from an institutional perspective. We will have Gilles, who is the market head for Switzerland at Bank Julius Baer, Ruest, who is a managing director at algo trading firm IMC, Evgeny Gaevoy, founder and CEO at trading firm Wintermute, and Giovanni Vicioso, who is the global head of cryptocurrency products at the CME Group. And Evgeny also wins the t-shirt competition, just saying. Please come on.
Okay, so we focused principally on retail and retail adoption in the last panel, though we did hear something about institutional. But we're going to delve a lot further into that here in this section of the micro discussion. What's happening on the institutional side? We've got market makers, we've got huge trading firms, we've got the leading private bank in the world represented here. And we're going to get some interesting perspectives on where we are today and where we could be in the future when it comes to institutional crypto adoption. So let's start once again with definitions, just like we did in the last panel. Where are we now in terms of adoption of cryptocurrencies on the institutional side? Giovanni, let's start with you.
Sure. First of all, I'd like to thank Nicolo and the CFC board for the opportunity. Where we are now, exciting days, right, with spot Bitcoin ETFs being approved, right? But what we've seen, say, particularly after the FTX debacle in 2022, right? We really started seeing institutions begin really to move into the space more strongly in 2023. And I think a function of that was that part of the things, say, that the events of 2022 helped shed some light on is that need, say, for risk management and proper tools, right? And at CME, we've seen a very diversified mix of participants. We're seeing hedge funds actively trading. We're seeing money managers in the space, liquidity providers such as some of my colleagues to my right. We're also seeing Bitcoin miners in the space. But we started out actually seeing then banks become more active. And banks have become more active both from a clearing perspective, where banks now clear roughly 25% of cleared Bitcoin futures volume at the exchange. And we're beginning to see now banks actively trade. In fact,
where are these banks that you're referring to? Are these US based? Are they European?
Global banks. Certainly seeing a lot of the Canadian banks, banks acting as authorized participants for the ETF products in that country. We're seeing some of the multinational banks, some of the multinationals. We're also seeing, say, Asia-based banks, as well as even Latin American banks active in the space. There's probably about a dozen or so banks that are actively trading, and those banks now represent a little bit over 1% of Bitcoin volume. And incidentally, this year, we're averaging a little bit over $3 billion per day.
So, Giovanni, I've got to be honest. That is better news than I thought. That is to say, I wouldn't have thought that in 2024 we've already been this far. Even if it's only 1% of Bitcoin trading volume, there's some big names that we're referring to. Okay, so that's a good snapshot into it. At Wintermute, of course, you're trading with all sorts of counterparties. Have you seen today? What are the counterparties like? Are they other trading firms? Are you trading against retail? Who are you seeing as your counterparties today?
I would say we definitely have seen rising interest on the institutional side of things compared to 2021, where it was still a lot retail driven. Now for example, last year we've seen a really massively increased interest in OTC activity. Part of it is due to FTX blowing up and people not necessarily knowing where to trade, like on lead venues. But part of it is, there is interest from all kinds of institutionals. It can be family offices, it can be venture funds, it can be banks, for example. And we see all kinds of institutional actors approaching us and our competitors for prices on OTC.
Leo, are they trading just Bitcoin? Are they trading other types of digital assets?
No, all kind of digital assets. Bitcoin mostly, I think, but we see it in all the altcoins as well. Ethereum, obviously. So it's across the board. But Bitcoin is like the leading thing. So if there's lots of trading happening in Bitcoin, then we see it in the altcoins as well. But it nicely distributes.
And is that evolving over time? Because I want to talk about the future, but it's really important that we understand today before we start prognosticating. So today, if it's principally Bitcoin, what percentage is Ether? And I'm not asking you to give me exact numbers, but how much of this is Ether does it feel like, and how much of it is other altcoins?
It feels like it's like half of Bitcoin is Ether, and then the altcoins is like also like half of Bitcoin.
Okay.
Roughly.
So it's pretty substantial then, the altcoin market even today. And we shall see where things go from here. At a private bank, of course, your customers expect something a little bit different, or clients, I should say, than at perhaps other financial institutions. What do people ask for today when it comes to digital assets?
Well, we kind of differentiate between two types of clients, first of all. It's kind of the crypto natives and more the traditional classical type of clients. And there the needs are a bit different. So for the crypto natives, it's really to have optionality. So they have made most of their wealth creation was actually with crypto. But when they want to invest, obviously they need to have fiat money. So they want to have the bridge to fiat. So a bank which understands their needs, a bank which is able to onboard them, and a bank which is able to provide them fiat money whenever they required it. But interestingly, they also need custody. So that's kind of a discussion I've had multiple times. Why should they use custody as crypto-savvy users? And there's an interesting reason for it. It's succession. What happens if I die?
Succession. Like life succession.
Yes, life succession. You know, imagine you have an illness, a mental illness, you cannot remember your private keys, or you're in a country which is a bit dangerous, ultimately, and you're being kidnapped, you're being forced to provide your hardware wallet, right? So it becomes an emerging demand to have custody services which are at institutional standards. And then lastly, what they require is private banking services. So it's tax advice and it's also wealth structuring. So that's really for the crypto native. And then for the more classical ones, they want to get access.
Sorry, when we say more classical, I just want to define that. You're referring to ultra high net worth.
High net worths and ultra high net worths for our bank now, so private individuals. So first and foremost, they want to have access. They want to get access to a new digital asset class, which potentially provides high returns, right? Access. Secondly, they want to use those tokens as to distribute or to diversify their portfolios, and they just want to invest in a secular trend. So it's really about getting access. And then what they like is convenience. They like a one-stop shop. They want to just work with one bank, which is able to provide them the full suite. So it's not just the financial assets, but also the digital assets. And then lastly, they want security, right? They don't really want to educate themselves typically in the space, so they just want to have a trustful counterparty which can provide, secure storage solutions.
So let's talk a little bit about trust and security. I think that's a very interesting point you brought up. Giovanni, you mentioned FTX earlier on as a reason why people didn't necessarily trust crypto. But today, we've seen the Bitcoin ETF take off. You've mentioned a number of huge financial institutions that are already doing something with this. Where are we today in terms of institutions trusting crypto? Do they know enough about the technology? You're a technologist, so you understand the tech. But I'm asking, at banks around the world, at large payments firms, at fintechs, do they understand this technology and do they trust what's meant to be trustless?
I think what's interesting, say, in our space, right? So we launched Bitcoin Futures back in December of 2017, and a lot of the conversations then were really about, what is Bitcoin, what is crypto? A lot of concern about CME entering the space and helping, say, to maybe facilitate illicit use of these new currencies, right? So there was a lot of that, right? So there was a lot of skepticism. Of course, the market rallied back then. There was a big ICO craze. Demand for Bitcoin grew. Price of Bitcoin went up. Only say to come down. But I say we fast forward 6 years. Those conversations have entirely changed. Where you now hear, particularly from institutions, it's more. I think that they have a deeper understanding Certainly Bitcoin's now 15 years old, so there's a maturity there, and people have come to understand what some of the potential implications of this new technology, be it the technology, say, or the coins themselves, what those use cases could be. So we're hearing more and more conversations with institutions about things like tokenization, movement of value, right? And that ultimately then drives more interest in the coins themselves. So we are seeing, say, more institutions like step into the space as a result, say, of deeper fundamental understanding.
And does it feel like it's deep, that understanding? The reason I'm asking this is back in 2020, 2021, there were sometimes a small group, maybe the innovation group at a big bank would be touching the space. And we saw even some of the very, very largest Wall Street banks, they might even have a digital asset team that was experimenting, but nothing ever went to production. We heard a lot of words like pilot, and then we saw those pilots very quietly go away. Where are we today? I mean, are there real working groups in production at these institutions?
I'd say for sure. I mean, you look at J.P. Morgan, for example, they already have the Onyx coin, right? Even though, despite, say, what Jamie Dimon says about no interest, say, in crypto, right? But you also see, UBS, experimenting with doing, say, some repos on chain. So these things are happening at the banks, and certainly, like, if clients, from an investment perspective, if a bank's clients have interest in the space, the banks are going to be there. And the point that I made before about banks stepping up their clearing, 25% is big growth from where banks were, say, maybe 3 years ago, when they were roughly about 5% or so. So we're really seeing, say, growing client demand, also bringing the banks in. But I think that the banks are also having their own use, say, for the technology as well.
At Wintermute, have you seen your client demand change over time? I imagine volumes are, to a certain extent, tied to price. That's historically how it's been. But are you seeing kind of a change in trading flows?
I would say it's, on one hand, it's price, on the other hand, it's current narrative. And that's quite important. Like, so currently we have the whole narrative around Bitcoin ETFs. So obviously, like, a lot of flows we would see in Bitcoins. There are a lot of sub-narratives, especially in altcoin space. And that's where we see a lot of flows as well, both like on the buying and selling side. So it's kind of like both of them.
How have your clients shifted? So as a market maker, you can work with a number of different types of clients. As your point, OTC trading is something you can do, but sometimes it's stabilizing a digital asset, for example, something that a firm like yours could do. Have you seen growth in that sector too?
I would say it's growth, but it's across the board. So it's not just banks growing their interest or family offices growing their interest, or I don't know. Sometimes we work with foundations on DeFi side of things. It's basically growing across the board. Like, there is definitely interest growing pretty much evenly. But I think bank interests is probably the biggest growth aspect. Yeah.
That's very interesting. And how recent is that?
I would say 6 to 9 months ago, like from our experience at least.
6 to 9 months ago.
It's been slowly building. That's the most interesting thing. It didn't happen overnight.
Right. This isn't something that happened because they heard about the approval yesterday.
Yeah.
Okay.
It's just how the banks work. Like, it takes time to build things. They probably got excited back in 2021. They started working on it. They had those working groups, and now they finally, some of them have custody built in-house. Some of them have enough people excited or enough clients being excited, and now we actually see this interest materializing in price and everything else.
All right, let me ask now a kind of weird question, but I guarantee you it's a proxy for real interest. Leo, have you seen, for you?
You get the weird one.
Have you seen the big banks try to poach your staff?
Never, no.
Really?
No, and it's actually a funny story, because in TradFi, you can ask the same question. Why are banks not trying to get people from HFTs? Or so we call ourselves HFTs, high-frequency traders. And I think the reason is that the cultures are so different. Like, an HFT is like a technology company. It's not like a financial company, really.
But surely you have some people who came from the banks and then ended up at your firm, no?
No.
Okay.
It's very
same even at Wintermute.
No, I mean, I don't want to be like, I want to be nice to the banks, I guess, but
yeah, they might be your clients.
Okay, I'm not going to talk about Wintermute. I can talk about the firms where I used to work before, Optiver, and at Optiver, people would go to banks after Optiver. I wouldn't say to retire, but like for a nice work-life balance kind of thing.
Okay, that's interesting. Because of course, I would theorize that you would start to see the talent either drain or pull from crypto native firms if you saw a lot of true institutional interest. Although I guess the numbers of banks actually signing up and the trading volume increasing, these are real metrics too. Okay, fair enough. What's missing? Gilles, I'd like to ask you, what's missing? That is to say, why today aren't 50% more of your clients asking for digital assets? What do you think is fundamentally missing today that maybe could happen in the future?
Well, it actually boils down to the question of the mass adoption, right? And the question is, what is going to drive mass adoption ultimately? And I think on the one hand side, it will be kind of a offering push. So you will have kind of new players, which will provide new use cases on the one hand side. On the other side, you will have the institutional adoption. So the more established players, which will commercialize digital assets solutions, and they will use their whole sales force to actually bring it to their clients. So that's kind of the push element. And then I guess media is very much triggering opinions across the population. And lastly, is the macro environment. If you have a positive macro environment or a negative macro environment, this will directly influence the risk appetite. So I guess there's different factors which are influencing mass adoption, but to me, these are kind of the four relevant ones.
So were there a improved macro environment, if the media narrative were more optimistic, let's just say, or more neutral as opposed to purely negative, we saw headlines all last year, for example, you think that we'd be closer to mass adoption in the institutional side? I
mean, ask yourself, ask your surroundings. As soon as you see that something going through the roof, you will have a fear of missing out. So you will have more and more people coming in and trying to get some exposure. So I guess, yes, by all means, this will have a positive impact.
And if I could add to that, right? Because I think, with the recent approval, right? I think what the BlackRocks, Fidelities, of the world bring is that they have very powerful marketing machines. They have very strong distribution channels, right? So those.
Can you? I'd like you to detail what those are. Only because in this industry, it's rather new. We didn't see wealth managers or wealth management arms selling crypto before. We've never seen, outside of a few very poor commercials on TV, a real marketing push, the way that traditional financial products can be sold. What could this look like?
And I think I think that you're seeing that already. I mean, if you walk through any airport in the U.S., you may see Grayscale's products being prominently advertised, marketed, right? You hear Larry Fink from BlackRock and how his position has changed, say, and his outlook, say, toward Bitcoin. So this is all to the point that you made. It's getting that messaging out there, right? And getting, say, that mass media to buy in. And then you've got distribution channels where, BlackRock, they're in the business, say, of issuing ETFs, and they're massive at doing that. So they benefit then from those entities that are already, say, distributing the myriad of other ETFs. Now they've got another product, say, to sell. So there's built-in channels that they can distribute these products to. But overall, I think when you look at the overall size of the market itself, I mean, Bitcoin now is about maybe a little bit shy of $1 trillion.
Yeah.
It's still a relatively small market, large in the crypto space for sure. But when you compare it to something like gold, it's a $14 trillion market. Much larger there, right? But I think as the market grows,
and gold is not nearly as big as crypto could be.
Correct, potentially.
Yeah.
But as the market grows, it's going to attract more of, say, the bank participants. Because I think banks probably want to see even, say, greater volumes for them to participate, or other larger institutions, for example.
Are we going to see a lot more trading firms in crypto in the future? What do you think? I mean, are you going to see more of your own quote-unquote competitors? Because certainly on Wall Street, or Wall Streets around the world, we see a lot of different types of firms. But in crypto, there seems to have been a bit of consolidation over the years, where the very best firms have survived and succeeded in difficult markets. Now, perhaps if we're in a bull market, are we going to see kind of a growth of trading firms?
I think most of the trading firms are already here, with the slight exception of US-based firms who exited post Binance, lawsuits and everything, where they felt like they were targeted, I guess. But my guess, most of them will be back. We'll see.
All the major Wall Street trading firms, you're saying, are trading crypto or will be once again?
Yeah, exactly. And I think we already feel it on competition side of things. It did not get easier this year.
So explain to those of us who aren't experts on trading. What does that mean? Are prices, I should say, are opportunities going away? What do you notice that's different today, for example, that maybe a few years ago you didn't, right?
Yeah, I would say it kind of varies. Like if we look at the major exchanges, the price dislocations in major tokens like Bitcoin and Ethereum are definitely not as crazy as they used to be. At the same time, we see platforms like CME predominantly having CME futures, for example, CME options. It all helps to shift a lot of volume towards CME, for example, or those kind of platforms, which helps a lot more traditional players. And I think like the biggest losers probably will be like really small crypto native market makers who on one hand, well, they have to integrate with CME, for example, in order to compete properly. On one hand, on the other hand, it's really tough for them to get access to capital, which is a big market structure shift from 2-3 years ago where we had, I don't know, Genesis, Celsius, given like...
Yeah, they could borrow.
Exactly.
Yeah.
And like this avenue is now closed and it's really hard for smaller players to leverage their trading activities. While for traditional players, like they welcome CME, they welcome Bitcoin ETFs because that's what they do. They can just connect with their prime broker and they get leverage, they get everything. It's the same game as they've been playing for years before.
So Leo, are you seeing the Bitcoin ETF as an accelerant for your business?
Oh, definitely, yes. So there will be more flow coming into crypto in general, which will be good for our trading businesses. Pretty sure about that. And I just want to say as well, it's super important that we get more professional trading companies into the market. I think that's one problem that we have right now. If you look at the market, for example, Bitcoin in detail, then you will see that the liquidity is really low. That's also the reason why like fake Twitter news can kind of move the price a lot.
Yeah, I was going to ask about market manipulation, actually. I want to talk about that because it seems like it's a real issue. After all, just 2 days ago, we were all here, there was a fake tweet sent out by the SEC that moved the price, and it moved it pretty appreciably. If this was a much bigger market, Giovanni, then I'm guessing a lot more than, what was it, $80 million or so in positions were wiped out. Is that $800 million if it's a larger market in the future? So, I mean...
Just going to correct there, because according to the SEC, it wasn't sent by them, right?
Oh, that's right. Not their problem. But no, I mean it. Like, is this a mature enough market yet?
No.
No.
No, it's not. I mean, you see it. If the price moves like that, it's not. It's as simple as that. So we need more market makers to make the market more stable. This cannot happen anymore. It's just too fragile.
So we need more market makers to make this industry a little bit more mature. What else do we need? I'm trying to understand what else is missing. It seems like reputation is one of the issues that's missing. Is that correct?
Reputation is one of the key concerns because you still have this early stage associations with illicit activity, right? So I guess this is a key concern. Security breaches is a concern because it's kind of a newish technology, not necessarily known. So fraud may be an issue. Hacks could be an issue. So indeed, and regulation is the big concern.
And you know, it's interesting you mentioned that. These are some of the exact phrases almost that Gensler mentioned in his letter, describing kind of being forced to approve this ETF. But he did mention these things, the illicit activity, and was kind of warning market participants that this was an issue. So it seems like this is something that's universally considered, at least right now.
And
what
it was
else?
Not my source, huh? Was not my source.
That was not your source.
Good.
I appreciate that. But what is, you know, what else is missing? If we can see the prices being manipulated this quickly, we don't have enough trading firms out there. Giovanni, what's missing?
You know, I'd say, you know, going back to how young the industry is, right? A lot of these companies, and we saw a few of those companies fail in 2022, they haven't gone through as many business cycles. When you consider, saying, going back to the trust issue, right? You consider a company like CME, been in business for over 180 years, has seen multiple cycles, has been through a lot of ups and downs, right? Certainly, we've now been in the Bitcoin market since 2016 with the introduction of the Bitcoin reference rate and then tradable product in December of 2017. So we've weathered all the various ups and downs in the crypto market as well. So I think that the marketplace is looking, say, for those trusted names. And certainly now with say, the approval of the spot ETFs, it's going to help alleviate some of that because you've got a lot of other big players, coming into the space. The conversation that you and I were having before about even the way that you're thinking potentially about accessing Bitcoin now, right? Where
we just discussed right before the panel, like I have my Bitcoin at a centralized exchange currently in crypto, which is sometimes
You said on a
scary.
centralized exchange.
Yeah, on one of the biggest centralized exchanges. And like it's definitely, definitely crossed my mind. Yeah, if I move it into Bitcoin ETF, okay, I'm going to pay 20 basis points more on an annual basis, but it will be definitely safer in the long run, and it will be, more convenient in a way. Because I mean, I do have some ETF portfolio, just like with traditional, I don't know, S&P, Nasdaq ETFs, which I held for years. It's pretty easy for me to add to it.
Right.
And I think it will be a really interesting dynamic with those Bitcoin ETFs to see how many of the inflows into them are new money and how much of it is actually people moving from centralized exchanges, people moving from crypto native custodians, for example, because it makes sense. Like it's safer, it's not as expensive as Grayscale, for example. Like how much will move from MicroStrategy, for example, into Bitcoin ETF. Like it would be really interesting to watch those how those inflows, outflows balance each other.
I want to change the topic a little bit. So right now we've been principally talking about Bitcoin, just a little bit of Ether and altcoins. But one of my earlier panels today was talking about RWAs. And we're talking about institutional adoption of really crypto, but blockchain technology. Do we see that this is on the horizon? From your perspectives, do you think that RWAs are going to take off beyond the money market digital assets that are already premiering? What do you think?
I mean, we're beginning to see that already, right? Where, the beauty, say, of RWA is that, you could take something that's relatively illiquid and now you could create some value for that, right? So there's real capital efficiencies that end clients can realize, and a lot of institutions, I think, are talking about doing that right now. So yeah, I do believe that it's something that, will eventually take off.
Is it the type of thing that your firms might provide liquidity to in the future? Or are you going to stick with these highly liquid commodity tokens?
No, I mean, we would definitely be excited, and we already provide liquidity in those products. To me, the biggest question is how much of it goes into the inclusion, which always was like a selling point of crypto. Like if you talk about treasuries, for example, there are a bunch of protocols tokenizing treasuries.
Yeah.
I'm pretty sure US is not very thrilled of, North Korea owning some of those tokens. And so it's always a question of, how to balance it and how to, on one hand, make it so that, retail investors, for example, in, Argentina can own those, which I think is totally fine and legit, and they currently don't have access to it, which I think is unfair. But at the same time, how to balance it against like all kinds of other goals that governments have against like not so great actors having access to those as well. And that will be the biggest challenge for RWAs in the coming years.
At a private bank, you sell sometimes very sophisticated assets to very sophisticated investors. Have you started to consider maybe using digital asset wrappers to tokenize some of these exotic assets that very few people have access to today?
Not yet. We have started first with indirect investment possibilities by creating an ETP, but not at this stage.
Okay, so a little bit early for that for now.
Well, we started in 2019, so I think for a financial institution, we've been rather an early adopter.
Yeah, it's true.
But I give us another 1 or 2 years to get there.
Fair enough. Let's talk about DeFi as well, institutional DeFi. There's some pretty brilliant technology. I think we can all agree that, for example, the advent of an AMM is pretty useful tech. But beyond that, it seems like there's something else to it, to DeFi. Are you guys, Leo, are you providing liquidity to DeFi protocols today? Do you see growth there on the institutional side in the future?
Yes, so we do provide liquidity, yes. We do see growth as well. So one problem with DeFi is always the AML concerns. That is something that so actually I use this conference to try to find out what can we do against this problem. So as an institution, so like if IMC comes in and trades on DeFi, there's always this AML concern, and I don't know how to solve it. It's
like, is
really
the money
clear.
tainted, so to speak, or is the value tainted in some way? This is a concern that you might have today.
Exactly, correct, yeah. So you don't know against who you trade there. So the counterparty could be some shady party that you don't want to trade against.
Unless it's some sort of KYC pool.
Exactly, but if you do KYC, then it's again, the KYC probably needs to be done in a centralized entity, so then it's not really DeFi anymore. But I think I've heard some solutions about how to solve that maybe. Maybe it's some kind of mixed thing. There will be some centralized component and some decentralized. I don't know, but at the moment I don't have a good answer to.
Yeah, so there are a few solutions that are being worked on, but yeah, again, like you can theoretically, I don't know, you can have wallets that have certain NFTs which represent that you passed AML checks, for example, or like another hot topic is that you're not American, for example. But ultimately, yeah, again, like are we talking about inclusion or are we talking about just how to make another version of existing financial system?
Well, I'm mostly interested in determining how much institutions are going to be making use of this technology is really what I'm trying to drive towards right now.
I would say it's mostly on proof of concept stage, yeah.
Okay.
And I would agree with that. And I also think that there's so many of these platforms, right, where there's going to be a lot of fragmented liquidity, right? And how does a liquidity provider, like, how do you guys find out about these projects and which ones do you support, which ones do you not support? So I think it's very early stages. And then you don't know, say, from a technology point of view, like these are relatively, say, untested, right, untried. So I think for institutions, it's probably really early to implement, say, a DeFi solution.
Because they may not be around in a couple of years. Is that one of the concerns?
Possibly.
Okay. So for now, we're going to stick with our traditional digital assets and the trading of those. What about more complicated products? Do we see more sophisticated products involving digital assets in the future beyond these single-shot ETFs? Do we think these could be popularized in 2024, 2025?
All up to US regulators, I would say. Yeah.
And why only US regulators? Because, you know, the world's a lot bigger. I'm an American, but we're only 4% of the world population, even if closer to 25% of
population,
GDP.
yes, GDP, a bit more, yeah.
Okay. Well, I mean, I would hope that here in Europe and abroad, we'd see some more experimentation and perhaps some institutions would do that. Are you seeing some of this perhaps in Asia, for example?
Sorry, so I think maybe one instrument that is a bit more complex than the ETF is maybe an option on the ETF. But options in general in crypto are quite small still, so there's not too much happening there. So I think as long as there's not more volume being traded in these options, I wouldn't expect more complex products to become interesting.
But we've seen sort of futures have been out for some time now. Do we think volumes are going to increase on futures if volume on the underlying assets also increases?
Oh, 100%, yeah. And I think that the ETF will help with that as well, right? Because it is going to attract new participants to the market. It's going to create different trading opportunities, right? I heard earlier today, for example, that the BlackRock ETF is pre-market like trading at a 25% premium, right? So when you think of like those
25%?
That's what I heard. So when you think of those price dislocations and the availability, say, to trade Bitcoin, across futures, across other futures-based ETFs, spot markets, et cetera, there's going to be a lot of trading opportunities. And in terms of like new...
Sounds like a gold mine is about to be found.
Could be.
Okay.
But in terms, say, of new products, we recently introduced Ether Bitcoin ratio futures. So that's the ability to trade that relationship in a single trade. We're exploring introducing, say, basis products, so the ability then to trade Bitcoin futures relative to a price formation in the spot markets. So for us, though, there's plenty to do within Bitcoin and Ether. And we'll continue, say, to introduce products and other ways of getting access to those products.
Well, it sounds like traders are going to have a whole lot of opportunities to make or lose a ton of money. But that's what institutional finance is all about. Excellent. So 2024 predictions, that's the one last thing I want to ask all of you gentlemen. What do you think is going to be the biggest surprise in 2024 when it comes to institutional crypto? Evgeny, we'll start with you.
Yeah. Biggest surprise. My guess would be just, how big the AUM growth would be for Bitcoin ETFs. Yeah. I think that would be the main theme. Like, I don't think, and maybe the negative surprise, how little will go into Ethereum, for example.
Okay, are we bearish at all? Is there a possibility that all this unbridled optimism is going to sink away, Gilles? What do you think?
I think I wouldn't be sitting here, right, if I'd be Baer.
Fair enough. Okay, so we're optimistic.
So in my opinion, the biggest big bang which could happen is a supportive and a very clear regulatory framework, which is kind of global. I don't believe it, but I hope it.
That would be nice. That would be nice. Giovanni.
I'm just excited, say, for, like as Evgeny mentioned, say that growing institutionalization, say, of the market. When you look, say, at the products that CME offers, we offer trusted, regulated, highly accessible, highly liquid products. I'm really excited about the prospect for that growth.
Leo, what are you most excited about in 24?
So I think the biggest surprise is hopefully that there will be no surprise. But the market just going up slowly, maturing step by step. I think that would be my hope.
No more black swans. Okay,
No
you heard it here first, everybody. Well, thank you so much, gentlemen. This has been fascinating.
Thank you.
Thank you.